Hello everybody, welcome to Mining Now. We are filming at CIM Vancouver 2024, and our next guest I'm really happy to have on. It's actually one of CIM's corporate partners as well. It's Wes Carson. He's Vice President Mining Operations with Wheaton Precious Metals Corp. Wes, welcome to Mining Now. It's your first episode here.
It is. Thank you, Roy.
So obviously we're going to get into what you're doing with Wheaton, but maybe just for the audience, do you have experience in the mining industry? Have you been around this for a long time?
I have, yeah. So I'm a mining engineer by background. So
nice.
I graduated from UBC in 2000. So
excellent.
Started in the industry, I guess, in 97. So I guess that's 27 years. I've been kind of working in the industry and kind of started first 10 years of my career kind of with global majors. So I worked for Cominco and then Teck, and then I went over and worked for Placer Dome and Barrick for about the first 10 years. And then I did kind of 10 years with the juniors after that. So I did 5 years with Terrain Metals on Mount Milligan, and then 5 years with Sabina working on the Back River project up in Nunavut. So, and then I've been with Wheaton for about 7 years now. So.
Fantastic. That's probably been a lot of now with Wheaton. Now, was that all that experience? Was that really helpful for
Absolutely.
What you do? Yeah. And for anybody who doesn't know, let's just maybe just give a quick overview of Wheaton Precious Metals, what you do, what your expertise is.
Yeah, absolutely. So Wheaton Precious Metals is a streaming company by nature. So we're basically a finance kind of. So we don't operate any of the mines that we invest in. So,
right.
But we're invested in 18 operating mines and 26 kind of development projects all around the world. And really what we do is provide funding that is kind of in line with either equity or debt. We're kind of like the third leg of the stool, if you want to look at it that way, as far as financing new projects or doing kind of balance sheet repair or kind of helping out with funding of mining companies. So, and generally the concept of streaming is that we'll purchase a certain portion of the precious metals that come out of a mine.
Okay.
And we'll purchase that for an upfront payment, and then we also make an ongoing payment, which is we call a production payment. And that's usually somewhere around 20% of spot. So we've got fixed costs, which is very nice, and then particularly in these times. Yeah. and then we get that metal for the life of mine. So on assets, if you use, we've got the Salobo project that we bought from Vale. So it's a large copper mine in Brazil. Okay. So we invested $3.6 billion with them over a couple of different tranches, and we get 75% of the gold coming out of that mine, which is about 250,000 ounces a year of gold, and we pay about $400 an ounce for that, just over $400 an ounce. So and then we get the upside on that, basically. So it's a very clean kind of model overall. I mean, that mine has a very long life to it, and that's what all of those assets kind of are, is you're really looking at kind of top tier assets that we want to invest in and top tier partners. But to go back to kind of my experience with it, you've got this range of partners. So we've got everything from small private companies all the way through the Valets and Newmonts of the world. Right. So having that breadth of experience dealing with both small companies and large companies is essential in my current role, which is really dealing with all of our existing partners. So we've got one group that does kind of all the new business, and then as soon as we do the deal, then it gets handed over to me, and I actually manage those partnerships kind of all the way through. So,
those can be going on for years and years, obviously.
Absolutely, yeah.
Okay.
Yeah.
Would you say it's a pretty popular model, like you said, like the third leg of the stool? Mm-hmm. Is it? Do companies typically look to do a streaming on like a portion of that development?
Generally, it doesn't work for every project, so you have to look at, and it really depends. The ideal is a base metal mine that has a precious metal byproduct, really. So, and really the best way to kind of describe that is usually a precious metal company trades at a higher multiple or a higher multiple to NAV than a base metal company does. So we can actually pay more for those precious metals than they're getting credit for in the market.
Right.
So, and that's really where the real value comes in. If we're streaming a primary metal, so if we're streaming gold from a gold mine, that value proposition isn't as clear. So, but it still generally works, because even with particularly development companies, we trade at a much higher multiple than a development company does. So, and that's what we've seen a lot of in the last couple of years here is that the value that we can provide for them now is usually more attractive than what they can get from debt or generally even equity as well, because there isn't the dilution that they get from that.
Let's talk about our Heavy Industry World Tour, brought to you by Savannah Equipment, supplying mining equipment worldwide. And Corporate Traveler Canada, helping companies travel the globe simpler, faster, easier. We are heading to events across North America and Australia and filming episodes on location. Email us at info@crownsman.com to be part of Crownsman's Heavy Industry World Tour. The mining industry is navigating a significant transformation driven by electrification, critical mineral dependency, and net zero targets. But balancing daily operations and capital projects can be overwhelming. Burns & McDonnell is your trusted EPC partner, supporting projects from concept to completion. With more than 125 years of experience, they stand ready to help the mining industry meet the demands of the energy transition. Visit burnsmcd.com to learn more. Use drone data to map, measure, and manage your work sites with survey-grade accuracy. Propeller transforms your photogrammetry and LiDAR surveys into a realistic, interactive 3D map. That map is where collaboration happens and accuracy wins every time. It's a cloud-based workspace for project teams to measure and manage their reality in real time from any device. With survey data, designs, measurements, and media in one place, the right data is always ready to go. It's time to replace rework with great work and make great work the status quo. Visit propelleraero.com to learn more.
The question I would have too, so a new project is going in, and like you said, like if it's got the gold component to like a copper mine.
Yep.
So you'll basically look at that, and I've heard like a lot of times that gold can almost be like how they finance the mine, right? So that's where you come into play.
Exactly. That's the idea. So yeah.
You mentioned like balance sheet repair too. What does that entail? Like, what are you looking at for that? That's an interesting. As a value investor myself, that's one where you see some crazy stuff on balance sheets.
Yeah. So generally, what that means is that we're looking at. That's when the larger companies kind of come to us. So when companies and usually it's as the commodity cycle is kind of coming back off. They've done a whole bunch of purchases on the run up. And then they've got too much debt, basically. So, and that's how we've gotten streams from. We've got the silver from Antamina from Glencore. So we get all of their silver from Antamina, and that was done back in 2015. That would have been at a time when Glencore needed the cash. So, and same with Vale. That's when we've done the Vale deals. It's been around when they needed the cash at that point, and it was a value-add way of them looking at their cost of capital, and we were a cheaper cost of capital than what they could achieve at that time.
So a lot of times they're going to weigh it. They're going to like, okay, we're going to do a bond issue, and is the streaming more lucrative for us at that time?
Exactly.
So it's a win-win for, you, of course, because then you get the upside. And then
Exactly.
Okay.
And there's a few other companies in the space, but really, I mean, we're actually the largest by market cap right now. So Franco-Nevada would be the other one that they're our most direct competitor.
Right, they do the streaming.
Exactly. So they're exactly the same model as us. They tend to have more royalties than we do. We've only got a few royalties. We focus more principally on streams, and we focus more.
Actually, to the streaming versus royalties, what does that model look like?
Basically, on a royalty, it depends on there's multiple different types of royalties.
Okay.
So, but a royalty you get paid in cash as well. So, and we get paid in metal. So that's the main thing.
Okay.
So there's a tax benefit to that in that you don't have to pay the full tax on that cash right up front. There's ways you can manage that by us. And then we also have some upside in actually when we sell that metal as well, so in how we sell that metal. So there's some more flexibility around that. But primarily it's just a tax efficient way of managing that metal. So essentially the same kind of model overall. And most financings now have gone more towards streams just because it is a more efficient mechanism than a royalty. So most of the new big deals that are out there, you don't see very many big royalties anymore. They've generally gone to that streaming model.
Falkirk Environmental Consultants transform ideas into sustainable realities. Founded in 2019 by a visionary team including Jen Turner, Max Brownhill, Mike McPhee, and Indigenous engagement specialist Christy Smith. The team champions projects that thrive and respect communities and ecosystems. Falkirk specializes in project planning, Indigenous rights, community well-being, and water stewardship. The team at Falkirk are more than consultants. They are natural resource stewards that support a sustainable future. Falkirk, getting it right the first time. You can contact them info@falkirk.ca to learn more. CIM is Canada's leading technical institute dedicated to the sustainability of our industry. Members enjoy professional growth opportunities through CIM libraries, publications, webinars, societies, and the job board. Experience the CIM community firsthand at the Conference of Metallurgists August 19th to 22nd, iCard September 16th to 20th, and the CIM Health and Safety Conference October 6th to 8th. Visit CIM.org for more information and join CIM today.
Yeah, the going back and again to the balance sheet repair. So I guess right now would be, I guess they call it a boom cycle. So then as people acquire all these assets, do you think they plan for that too? Do you think they kind of know what's coming, obviously, because nothing goes up forever?
It's hard to say. I mean, I've been in the industry long enough to see that you would think we'd learn lessons from this stuff, but I'm not sure we do. So we still buy stuff up at the top and then seem surprised when it goes back down again. So
yeah, it's always surprising. Like it's like for so many things in the market, it's kind of like that backwards scenario where you want to get something on sale, but not a stock.
Exactly.
The going back to the streams as well. Like a project always changes. You've got something might go from higher grade to a mid grade. As that evolves, how does that affect the streaming agreement?
So that's one of the other advantages of streams, certainly, is that you can manage them as the project evolves through its life. I mean, the first thing is that generally we try not to take too much of the economics so that it will damage when it goes down into a down cycle. And we do extensive modeling on the geology side, on the production side, and all through kind of a project's life to try to make sure that we're not taking too much of the economics. Now, I mean, there's obviously all sorts of assumptions around that, and as these things extend out in life, things happen. And as these go through their life, we have renegotiated multiple streams as you get through them. And generally that's after payback has happened and it's right through kind of a later stage in the life of an asset. But we've done things like supporting exploration, further exploration, and ways of incentivizing a partner to actually put money back into the ground, or just looking at temporary kind of bumps up in the production price just to make sure that they actually get through a tough time. And we'll work with a partner to really work through how best to manage that difficult time that they're having until they can get back into a place that is more manageable. You
mentioned on for the geology side, does Wheaton bring in geologists? Is that part of your team as well?
We've got a very strong technical team that encompasses kind of geologists, mining engineers, and metallurgists. So right. an internal team. We will occasionally bring in external help as well if there's something very specific, but our team is mostly 25 plus year experience.
Right.
And really they're professionals that have worked in this space for a long time. So it's generally we'll build our own models, and that team looks at dozens of projects every year. I mean, probably 100 plus projects every year that they look at. So they see a breadth of assets that you just don't see kind of in any other space. So.
Actually, yeah, that's an interesting point. Obviously for if you're investing in public markets, you got thousands of companies to choose from. Does your team basically go through hundreds of these projects a year?
Yeah, absolutely.
And is that typically worldwide, or where are you mainly focused?
Absolutely. We look worldwide. Most of the assets that we have right now are in the Americas.
Okay.
But we have just recently done a deal in Africa with Platte Reefs, so, and that's Ivanhoe that has that one. So it's a really interesting project down there. We've just recently done a small royalty in Australia as well. That'll be our first one in Australia. But we've looked at really everyone. So the only place we're really missing right now is Asia.
Okay.
But we've looked at lost assets on every continent. So and do every year. So and it really just depends on the type of partner and what they're choosing to do, and then also the quality of the project. So.
If I'm a mine operator, would I ever say I'm using you for one of these streams, would I ever look at you to kind of weigh in on a project that they're looking to potentially develop and buy?
Absolutely. So we a lot of the deals that we do are with existing partners. So we've actually carried on those relationships with partners. And some of the things that we do, I mean, certainly on the technical side, we provide technical assistance. So it's basically free consulting. That's I go down to most of our mine sites at least once a year, and and I'll bring a technical team with me, and we'll walk through kind of the asset every year with them. And because we see so many assets, we can usually provide some level of expertise in specific areas for them, or if they've got specific problems that they'd like to run through. Right. The other one that we do is on the social side. We have a fund that we do on the sustainability kind of front that funds a lot of sustainability projects at all of our different operations, and we've had huge success with that, with just building with partners and generally the way we try to do that is a 50-50 kind of investment. So and the partner manages the investment.
Yep.
So but we'll put in half the money for, I mean, whether it be education programs or health programs or environmental or whatever it is.
Yep.
So and we've done lots of that. Particularly South America has been our most successful, in Peru and Brazil. We've had some really successful stuff with Hud Bay on the Constancia project, and then
where's that one?
That one's in Peru.
Peru, okay.
So, yeah, I'm actually headed down there in 2 weeks. So
nice.
It's a great place to go visit. So yeah.
That's fantastic.
Yeah.
When did you start doing the sustainability piece of that?
We've been doing that for just over 10 years now.
Oh,
so we were kind of the first in the space to really kind of get into that, and it was something that we've pushed for quite significantly, and now quite a number of our competitors have been forced into doing the same thing. So it's the right thing to do, and it's not something that you have to do, certainly, but we feel that we're taking a certain percentage of the economics, so we should be investing back into those partner communities at the same time.
Yeah, it seems like a good partnership. That makes a lot of sense. The going into technical, we already covered that, but I guess on your end, it's an interesting, like streaming is interesting because you obviously don't have you have a risk if the mine suddenly doesn't produce.
It's a binary risk, really. So it's either it's running or it's not.
Yeah. So I guess my question on that would be, is there ever issues with deploying the capital that you have to get all those assets working?
It's an interesting one because when you do that analysis, it's really and it's one of the reasons that we really focus on kind of Q1, Q2 assets. So really assets that are in kind of that top half of the cost kind of quartiles, just to make sure that even through cycles that these things will keep running.
Yeah.
You don't really want to be trying to manage streams through those kind of boom and bust cycles as much as you can. And if you invest in those kind of top quality assets, then usually they're more sustainable. So, and I mean, that means that it's very competitive to get those deals done, but they're the right deals to do. And that's why we're doing some of the things to differentiate ourselves as well, really, is that you want to be kind of that partner of choice on these things, because money's not always going to be you can have exactly the same deal and you want to have something else that's going to get you to that next step.
Those deals with let's say your other two main competitors, is there a bunch of back and forth at times to get those projects?
There is always. So I mean, there's always multiple phases to a deal, and there's always back and forth on them. And most of these, we did a few last year that weren't competitive, that were actually sole source to us. But for the most part, particularly the larger deals are always competitive.
Yep.
So and there's, I mean, aside from Franco, I mean, you've got Royal Gold would be the other one that's in that same space, and there's a couple of other smaller ones as well. And Royal's probably half the size of Franco and us. So, and then there's 3 or 4 others that are in that kind of mid-tier space, the Cisco and Triple Flag and kind of those ones. But they're all quite a bit smaller. So generally on these larger deals, I mean, you're looking at stuff that's $500 million or more.
Right.
Really, us and Franco are really the only ones that can generally do that.
Actually, I don't know if you have how much is deployed right now in these projects? I don't know if that's how you measure it, because you're basing when's your return, how long before you get that return back, and then you're making profits, right?
Yeah. So we've got, I'm trying to remember off the top of my head, I think it's $11 billion that we've got out right now, and we've got payback on almost all of that in our portfolio now. So we've gotten back almost exactly as much as we've put in.
Yeah.
And the reserve life is still in the kind of 30+ year range that we've got. So our growth profile over the next 5 years is 40% plus. So, and then it kind of starts to kind of plateau a little bit at that kind of 5-year mark, but we're going from this year, we're kind of 550,000 to 620,000 ounces of gold equivalent ounces is our guidance.
You said 560 to
550 to 620 is our our guidance for this year.
Yep.
And we'll grow up to 800,000 ounces by 2028, and then we get to about 850 from 2029 through to kind of the next 5 years after that.
So obviously we went through those years since 2008. We had the crazy interest rates. That must have been prime for you guys bringing in capital to deploy it for times like these.
Yeah, exactly. So the company was actually, we're celebrating our 20th anniversary this year. So we started in 2004.
Okay.
So we were kind of growing through that period, certainly. So and it's been an interesting one, because one of the reasons that there aren't a whole bunch of other competitors in this space right now is because of the size that we've grown to. Right. So and it is kind of when you're kind of the the big guy, you get to make the choice on which assets you want and which ones you're going to let go.
Right.
So really all of the top tier assets, and we've got lots of capital to deploy. I mean, we've got, I think it was $300 million in the bank at the end of the quarter, and we've got a $2 billion revolving credit facility. All of that capital, the goal is to actually deploy that capital as quickly as you can. Exactly.
Have you ever gone out, like, that's one thing I didn't actually get a chance to look up, but do you ever do, like, when the interest rates were like that, were you doing like debt issues as well to raise more capital, or did you not even bother?
We generally don't. No, we don't need to really.
No.
So yeah. So I mean, what we find is that when the debt is getting more expensive, then more people are coming us for deals. But we don't need that capital. So I mean, really, we've got either we're funding it from cash flow, or we've got this revolving credit facility that's at a great rate for us. We haven't issued equity in years. It's been over a decade since we issued equity.
It's good to hear when you're not no dilution.
Yeah, exactly. So makes for happy shareholders. So,
exactly.
And a very strong dividend as well. So I mean, that's the other thing is we've got a great dividend on our.
So you're able to deploy that too as well, which is great.
Exactly.
Going into the mine phase, so like you get into, obviously there's this. They always talk about like discovery to making a mine is 18 years. When typically are you getting involved?
So it's honestly it's been becoming earlier and earlier. So, but generally and a lot of that is because of the lack of equity participation in the industry right now. So juniors have been coming to us earlier. Usually there needs to be at least a resource and preferably at least a PEA on the asset before we would come in. So PEA, so preliminary economic assessment. So that's usually kind of pre. So usually it goes, PEA is your first kind of engineering sort of document that you do, and then it goes into a pre-feasibility study, feasibility study, and then usually you're ready to go into some sort of construction after a feasibility study.
Right, okay.
So the kind of earliest stage would be that PEA. So and that really gives you some idea of the economic viability of the project, and then we'll go through and build our models around that as you look at it. So and it has to show, I mean, size and kind of that. But we did a number of deals last year that really have kind of 5+ year runways on them before they'll be producing.
Oh, really?
So and really, if you see a quality asset like that, then getting in early actually makes a lot of sense.
So that's part of the. I think you mentioned. So 18 mines are funded right now, and then you've got. Was it? How many are in development?
18 that are actually in operation right now, and then we've got 26 in that kind of other category, which is primarily development assets, which are ones that are in varying stages of either in construction right now. So the big ones in construction right now, we've got Blackwater that Artemis has in BC. We've got,
right. So you're doing that one.
Yeah.
Okay.
Yeah. So we've got quite a 400 and something million into that one. So and then we've got the Goose project, which is B2 Gold, was Sabina. So So we're
they're coming on. They're coming on later today too.
Awesome. And then I'm sure you'll hear all about it. And that's I love that project. I mean, I spent 5 years of my life working on that project.
Wow.
I did that one all the way from kind of initial PEA right through basic engineering.
And sorry, the name of that one is?
It's Goose or Back River. It's
Goose Back River. Yeah.
So Goose is the main project. Back River is kind of the region.
That's right.
Of it. So Goose is what they're building right now. But it's an amazing gold district. Like it's and it was a great play by B2.
That's is that one in
Nunavut?
It is Nunavut. I was talking to them about that. Fascinating.
Yeah,
it's nice when you can tie like different shows kind of together a little bit.
Absolutely. No, it's a great project. So and I've talked to them quite a bit over and I obviously knew the Sabina team very, very well. So I mean I built most of that engineering team myself. So it's
nice.
nice. And took that thing all the way through and it's pretty cool to see. I mean that one and then Mount Milligan was the other one that I've gotten to work on all the way from like early stage right through construction, and it's pretty amazing to watch those things kind of actually get built and what it takes and the amount of time it takes to actually get these things going. So and that's always the challenge when you're investing in these is really, I mean, what is the time frame? So you can have an amazing asset, but there's all sorts of, I mean, hitting the cycle in the right spot, permitting, all of those things that create all sorts of interesting.
Typically when you look at that asset, and you obviously with that amount deployed, how quickly are you hoping to get back the initial investment?
Yeah, it really varies depending on the project, and when we look at evaluating projects, we'll vary the rate that we actually put on them depending on the risk. So and you can look at different risks, and we'll be looking for a higher return on a higher risk project.
Right.
So and it just depends on that. So it's not a set kind of payback that you're looking for. It's really what is that rate that you need to get in order to justify the risk that you're taking on that asset. So
and even with the juniors, for people watching in the mining sector, I guess for that it's kind of an open call. Like you want to see those projects.
Absolutely. Yeah. Exactly.
Well, this has been good to cover, obviously, on a first episode, Wes. I guess, what would be for the viewers at home? What would be some interesting, or maybe some things we haven't covered that those people should know that are in the mining? Is there anything that kind of stands out?
Yeah, I mean, I think the industry is definitely in a transition place right now, for sure, where you're looking at kind of this whole concept of critical minerals and what does that actually mean. It's given us a bit of a platform as an industry, I think, to actually build on, and it's something that we've always struggled with. Is how do you put kind of mining in the light that I have always felt it should be in, which is really a very positive one. I mean, you look at things like, a lot of the sustainability initiatives that we've got in the industry. There's lots of other industries out there that should be modeling themselves after what we do in the industry.
Yeah.
So, I mean, we go into these small communities out in the middle of nowhere, and really we're starting from scratch on a lot of this. So you learn very quickly how to deal with indigenous cultures, how to actually work with the environment that you're in, and then how to actually restore that back to something that is going to be usable and forever. So there's a lot of things that I think other industries are just starting to kind of figure out that we've known about in mining for 50 plus years. So,
right.
I mean, you look back and I mean, the 60s and 70s were kind of safety, and the 80s and 90s were kind of environment, and then basically since the 90s, we've been on this kind of social kind of, and how do you actually, really social license to operate is probably the best way to sort of put it, is that you need to have the permission of the communities and of the indigenous people and that. So I think as an industry, we have a lot of things that we can teach.
I think Canada I think people a lot of times they do look at it as a gold standard of operating, and you see some of these like really successful mines around Canada, massively profitable, very safe.
Exactly.
And
exactly.
No environmental, well, not no, but very low environmental risks.
Absolutely.
And the plans in place as well. The other thing, this might be a curveball, but do you see, people are talking a lot about the permitting process for a mine. You mentioned that you have to look at that 12 to 18 years. Actually, in Canada, I think it's average 18 years. Is there anything that stands out to you that will help improve that timeline?
I mean, it's clarity on what is actually required, I think. And I mean, I've been through the permitting process on both Milligan and on Back River.
Right.
And challenging processes on both of them. I mean, both of those were 10 plus years to kind of get through the entire set of what you needed to do. And I think it's clarity from government on what is actually required.
Yeah.
I mean, no mining company is looking to bypass a process. So, and I think that's the concern that often seems to be there, is we're looking for some sort of a fast track on it to try to skip over things. But really, I mean, the work that's done to baseline and to actually do all the analysis that needs to be done on these projects is tremendous.
Right.
So, but when there's uncertainty around what that timeline is, it makes it very challenging for particularly juniors to raise the capital to be able to actually start these processes.
Such a long, like for a junior, you're talking so many years out.
Absolutely. And some of these, because of just the cost of doing all of this analysis now, you're talking tens and some places hundreds of millions of dollars that you're investing long pre-production. So, I mean, it's a very... So I think that, and that's something that, certainly CIM and the Mining Association of Canada and all the other advocacy groups out there do a good job of, is really trying to advocate government to give kind of this more clarity on it. But we get caught up in politics quite often. And Canada's not unique in that. It happens all over the world.
Yeah, you hear about all over the place. Yeah.
Exactly. I mean, these are massive capital projects that provide, in lots of cases, thousands of jobs and certainly thousands upon thousands of peripheral jobs around these different projects. That and those are the stories that need to get out there more, as the benefits of these industries.
Well, like I'm in Kamloops, so New Gold and Highland Valley Copper, and then there's like the spinoff is wild.
Absolutely.
It's just it's phenomenal for the economy. But like you said, I haven't been through that process. I don't have any engineering degrees, but you would think there's probably a lot of, I don't know if you've seen this, but I wonder if there's a lot of repetition that could get rid of like the duplicated process. There's got to be something like that would help.
There is, certainly. And some of it is the duplication between the provincial and the federal process, and there's been attempts over the years to try to streamline those. I would say that the process in Nunavut was somewhat cleaner just because it is primarily a federal process. There's obviously no province up there to get involved. So it was
somewhat 10 years.
Cleaner, so probably from beginning to when they'll actually get into production, it will be for sure. So because I mean we started that process. I mean our original EA submission would have been back in probably 2013, 2014,
that's
something
pretty
like
fast.
that. So
that's fast.
Yeah. So that's and to when they'll be operating, it'll be 10 years for sure. So
yep.
I mean it was I think 5 or 6 years to actually get through the process, but that was on the idea of that originally was supposed to be a 3 or 4 year process, and then things just extend on each step of the way, and that's, I mean, like I said, I mean everybody's trying to do everything right through these things, and there is, I mean, lots of professionals that spend a lot of time going through this, and unfortunately, often I think what it is that the governments are under-resourced on these things, and you've got a whole bunch of kind of mid-level bureaucrats that have too many of these things sitting on their desk, and they don't know how to sift through these in a way to get kind of the right ones through. So and how you filter that, how you actually make sure that these processes are smoother.
With your background, with your streaming projects, to tie it all back together, can you tell on certain projects that there probably is going to be a better, like it's going to be faster or not, or is it just too hard to tell?
You can generally. I mean, you can tell by the quality of the team that's working on it generally, and all it is. I mean, it's the same as investing in a junior. You look at the management team, you look at the experience that they have, and it's the same thing that we do. I mean, and whether you're looking at the technical side of a project or whether you're looking at the permitting side of a project, or it really is kind of like how do you best measure that risk, really? So, and some projects are just better, like they are, and some jurisdictions are just easier to work within as well. So.
I think sometimes you hear about you can tell a project's good just because of the publicity it gets and how they're messaging, and people get on board with it, and that's got to help.
Yeah. Generally, and it is getting that kind of political traction behind them as well is essential. So if you can get, and really a lot of that is getting the communities around these things on board.
Indigenous communities, the local community, what's the risk, what's the upside.
Yeah, that makes it all a lot easier if you've got all
100%.
that. And that just takes time to do that work as well. So it's getting out into the communities and figuring out, and quite often the concerns that they have are all solvable. Like and they're all things that you were planning on doing anyways. It's just and that's the whole idea of the image of mining and what we do. There's still the image of the coal miner underground with the pickaxe, and that's just not what we do.
No, no, it's not. It's not. The pictures, they love the pictures, but it's gone away.
Yeah, exactly.
Well, that's fantastic. I think we can leave it there, Wes. That's phenomenal. Where can people find Wheaton Precious Metals?
Yeah. So I mean, we're public companies. So and certainly, I mean, we've got it on our website, or you can look me up on LinkedIn, or we got lots.
And we'll
of
link to everything as well.
Fantastic.
What's your ticker?
It is WPM.
WPM.
Yep.
Nice and easy.
Yep.
Perfect. Okay, thanks so much for joining.
Fantastic.
Thank you, everybody, for watching Mining Now here at Vancouver, CIM 2024. I'm pretty sure I'm going to get that wrong at one point, but that's okay. And please subscribe to Crownsman Partners on YouTube to watch this episode, of course, and all the upcoming episodes. Follow us on LinkedIn under Crownsman Partners and Mining Now. We've got pages for both. And thank you for watching. And until next time, we will see you then.